How often do you really stop and think about the products you use every single day?
Probably not that often, right?
Exactly. From your morning coffee, your toothpaste, maybe that snack you grab later on. These aren't just, random items.
Mm,
They're all part of this huge, incredibly dynamic world of consumer packaged goods, CPGs.
yeah.
So today, we're taking a deep dive into the global CPG market. We're looking at its growth, say, from 2021 all the way through to 2033.
Quite a span.
Yeah, and our mission really is to cut through the noise, look at the big trends, see which regions are really driving things,
Powering the growth.
powering the growth, yeah, and figure out what forces are fueling this massive industry. And just so you know, all our insights today, they come from a detailed analysis by Cognitive Market Research.
And it's fascinating because, look, this isn't just about big abstract numbers. It's really about understanding the pulse of consumer demand around the world
Right.
and how these everyday things, they directly feed into the global economy. It touches everyone, everywhere. It's very tangible.
Absolutely, very tangible. So, okay, let's zoom out first. The big picture.
Okay.
Globally, the CPG market pulled in sales revenue of over $1.4 trillion back in 2021.
Wow. That's trillion with a T.
Yeah. Now get this. It's projected to surge to an incredible $2.3 trillion by 2033.
That's a massive increase.
It is. And that represents a consistent global compound annual growth rate, the CAGR, of over 4.2% across that whole period.
So steady growth year on year.
Exactly. CAGR basically means like steady compounding increase year after year. It signals, predictable, healthy market expansion. So what does that consistent growth really tell you about this market?
Well, what's really interesting there is that pattern, that consistent, healthy growth. It clearly signals a robust sector, doesn't it?
Hmm.
And a resilient one, too. It seems kind of insulated from a lot of economic ups and downs.
Why do you think that is?
Because these are mostly essential goods, right?
Mhm.
Things people buy and use daily, almost regardless of what the wider economy is doing. It really shows how much of this market is non-discretionary.
That's a great point, especially when you think about all the global economic shifts we've seen.
Exactly.
Okay, so we've got this impressive global growth charted out. The next question is obvious. What's actually fueling this expansion?
Right, the drivers.
Yeah, and where is it most concentrated? Let's break it down region by region because this is where it gets really interesting.
Okay, sounds good. And when we look at where the momentum is highest, well, Asia-Pacific is undeniably the powerhouse.
The growth engine.
Absolutely. This region was already huge, nearly $500 billion in 2021.
Hmm.
And it's projected to basically double in size, hitting close to $876 billion by 2033.
Wow.
And its regional CAGR, nearly 5%. That's significantly faster than, say, more mature markets.
So drilling down within Asia Pacific.
Right. China alone is set to grow its CPG market from over $140 billion to more than $260 billion by 2033.
Huge leap.
It is. And that huge jump, it's not just population, right?
Mhm.
It reflects a rapidly growing middle class that wants, higher value CPGs.
And changing shopping habits too.
Definitely. A massive shift towards e-commerce there, which changes everything about how products reach consumers.
Okay. And what about India?
India. It actually has the highest national CEIGR globally,
Hmm.
over 5.6%.
Really? That high?
Yeah. Starting from about 77 billion in 2021, India's market is expected to nearly double to almost 150 billion by 2033.
And the drivers there?
Largely rapid urbanization and, again, rising disposable incomes. More people moving to cities, more money to spend.
Makes sense.
And it's not just those two giants. You've got countries like Singapore, a lot of Southeast Asia. They're also seeing key ERs over 5%. It shows broad surging demand across the region.
Okay, so Asia Pacific is clearly booming. Let's shift gears. What about South America? A different story there.
A bit different, yeah, but
Yeah.
still compelling. Rising consumption is the theme.
So the numbers.
The market's growing from just under 85 billion in 2021 to over 145 billion by 2033. That's a respectable CAGR of about 4.5%.
And within South America, is there a leader?
Brazil is still the dominant player. It's growing from over 34 billion to nearly 58 billion by 2033.
Okay.
But you also see Argentina and Chile showing strong growth around that 5% mark. So it points to a widespread increase in CPG buying power.
Probably linked to better economic conditions.
Likely, yeah. And just broader access to modern retail channels.
Got it. Okay. Moving across the globe. The Middle East.
Another area with strong expansion. That market hit nearly 78 billion in 2021.
Mhm.
And it's projected to grow to over 131 billion by 2033. That's a healthy CAGR of about 4.4%.
And who are the key players there?
You're looking at Saudi Arabia, Turkey, the UAE,
Hmm.
all showing strong growth.
Any specific examples?
Well, take the UAE. Its market alone is expected to almost double. It was just over $13 billion in 2021, projected to hit nearly $24 billion.
What's driving that?
A diverse population, growing purchasing power, and a strong appetite for both local and international brands.
Interesting. Okay, and Africa, a continent with huge potential, right?
Definitely. The CPG market there is forecasted to expand from around $46.7 billion in 2021 to over $78 billion by 2033.
And the growth rate?
The CAGR is almost 3.8%.
Wow.
South Africa leads the way there, growing from almost $20 billion to nearly $35.5 billion.
Okay.
And Nigeria is also a significant contributor. It's expected to grow at a CAGR over 4.1%. You've got a large young population gaining more access to CPGs.
Right. So consistent growth, if maybe not quite the explosive rates of Asia Pacific.
Exactly. Steady contribution. Now, shall we look at the established giants?
North America.
Let's do it. The big players.
Okay, North America generated over $409 billion in 2021. Huge base.
Massive.
Expected to reach over $630 billion by 2033. That's growing at a CAGR of about 3.67%.
And the U.S. leads, obviously.
As you'd expect, yes. The U.S. market is rising from over $333 billion to over $507 billion.
So the growth rate is a bit lower than emerging markets.
It is, but the sheer scale means even, modest CGR translates into hundreds of billions in new revenue.
What drives growth there? Is it different? It's often driven by different trends. Things like premiumization, people trading up, big focus on health and wellness categories, and also sustained brand loyalty, especially for innovative new products.
And Canada and Mexico.
They show steady, significant contributions too. Canada goes from about $45 billion to over $75 billion. Mexico's market is growing nicely too, over 3.8% annually, set to reach nearly $48 billion.
Okay, so North America is still a powerhouse, just growing differently. What about Europe?
Europe's another major player, of course, valued at over $304 billion in 2021, forecasted to rise to over $474 billion by 2033. That's a CAGR of 3.82%, quite similar to Africa, actually.
Interesting. And key markets within Europe?
Well, the UK market climbs from nearly $47 billion to over $75 billion. Germany shows really solid growth, from over $61 billion to more than $102 billion by 2033.
Any standouts in terms of growth rate?
Actually, yeah. Germany and Spain are both growing above a 4% CAGR.
Oh, okay, so stronger than the regional average.
Right. Yeah. Indicates pretty robust demand there, often influenced by shifting consumer preferences.
Yeah.
Things like sustainable products, ethically sourced goods. That's big in Europe.
Yeah, that makes sense.
And you also see consistent growth across places like Scandinavia, Switzerland. It really demonstrates the stability, but also the continued evolution of these mature markets.
So we've toured the globe, seen different growth rates, but what are the common threads? What's driving this overall?
Well, if you connect it all, the underlying drivers are pretty consistent across the board.
Like what?
You've got increasing consumer demand, obviously. Rapid urbanization is a huge factor.
Shifting people to cities with better shops.
Exactly. Rising disposable incomes, people just having more money to spend on more things, maybe higher value things. And of course, continuous product innovation. Companies are always bringing out new stuff to keep consumers interested.
Right. But these factors must play out differently, say, in India compared to Germany.
Oh, absolutely. That's what's fascinating. In places like India and China, it's the speed and scale of urbanization, plus that exploding middle class.
Yeah.
That's just supercharging demand for everything.
Yeah.
Basics to, aspirational goods. Whereas in, say, North America or Europe, growth might be more about premiumization, like we said, or new categories focusing on health, sustainability, convenience.
And e-commerce models evolving everywhere.
Definitely. So it's this dynamic interplay, really.
Yeah.
Fundamental economic shifts meeting changing consumer lifestyles.
Yeah, exactly. It really highlights how those core factors, urbanization, rising incomes, are just so crucial for Asia-Pacific's lead.
For sure.
But that sustained demand in North America and Europe also tells us, even in established markets, innovation and changing tastes keep things moving.
Absolutely vibrant.
So just to recap the big conclusion from the research, the global CPG market. Healthy, consistent growth everywhere. Asia-Pacific is clearly leading the pack.
Way out front in terms of rate.
But you've got sustained, strong demand in North America and Europe, too. And if you're wondering, which specific countries are really driving this?
The engines.
Yeah, the engines. Keep an eye on India, China, Brazil. the UAE, and Singapore. They really look like key growth spots for CPGs for the foreseeable future.
Definitely the ones to watch.
Wow. We've covered a lot of ground today, from that huge overall surge in CPG sales right down to the specific growth stories playing out everywhere.
Yeah, it's a truly global picture.
It really gives you a sense of how deeply connected our daily lives are to these massive economic shifts, doesn't it?
It really does.
Every time you grab something off the shelf, you're basically participating in this multi-trillion-dollar industry.
You are. And as you think about all this, maybe consider how these trends might influence what actually lands on your shelves next.
Good point.
Will we see even more innovation? Maybe driven by the demands from these fast-growing emerging markets. Perhaps totally new brands or categories we haven't even thought of yet. What new things will rising incomes and city living make essential? And how might that change the very idea of what an essential consumer good even is over the next decade?
Makes you think, doesn't it?
It certainly does. Lots to watch in the coming years. Welcome to the Deep Dive. Today, we're plunging into a world that, well, it touches every single one of us. Every day, the consumer goods market, CPG.
Right. Coffee, shampoo, snacks. It's everywhere.
Exactly. Seems mundane, maybe. But honestly, beneath the surface, it's this dynamic, rapidly evolving beast. And our guide for this journey comes from some really insightful excerpts from Decoding the Consumer Goods Market Landscape by Cognitive Market Research. Our mission today, let's try and get beyond the headlines, uncover what's really driving growth, what hurdles companies are facing, and maybe touch on some of the really exciting innovations changing the game.
Sounds good.
I promise you there are hidden forces here that might just make you look at your next grocery run completely differently. Okay, so let's unpack this.
Yeah.
What exactly is pushing the consumer goods market forward right now?
Well, the research points to a few big things.
Yeah, our source mentions these broad economic shifts and rapid urbanization first.
That's a huge one. You've got rising disposable incomes, especially hitting in emerging markets.
Right, and everyone's moving to cities, it seems.
Exactly. And as that middle class expands in urban areas, well, demand just shoots up. Packaged food, personal care, household stuff, drinks.
It's not just more people buying, though, is it? It's how they live.
Precisely. Urban life means people want convenience, they care more about hygiene, quality, and that pushes sales through modern channels. Supermarkets, e-commerce, even direct-to-consumer, D2C.
And you were saying earlier, it affects the products themselves.
Oh, absolutely. What's fascinating is how these big shifts translate into, tangible product changes that move to smaller city apartments.
Yep.
Brands have to think about compact packaging, maybe single-serve options. It's about fitting into that urban lifestyle. It's not just selling more, it's selling differently.
That's a really good point, selling differently. Which brings us neatly to the next big thing.
Right.
The digital revolution. Omnichannel retailing.
Right. Can't ignore that.
The sources really stress how central e-commerce is now. It's made everything so accessible.
Think about it. Fast delivery, subscriptions, easy payments online.
They're not just perks anymore, are they? They're what people expect.
Totally. It's the standard now. And brands that nail that integration, the online and the offline experience.
They get a big advantage. Better reach, engagement.
And conversion, definitely. But that seamlessness you mentioned, it's critical.
How so?
Well, it's not just about making it easy. It fundamentally raises the bar for loyalty. If a brand's website is clunky or, say, an in-store pickup is a hassle,
You just go somewhere else.
instantly. The cost of switching is basically zero. Click, click, you're on a competitor's site.
Wow. So brands have to adapt, constantly. No room for error.
Pretty much. Any little hiccup can lose you a customer. Every interaction counts.
Okay. And then there's the third driver. Shifting consumer values, health, sustainability. These seem huge now.
Immense. The research is clear. Loyalty today is deeply tied to these things.
People want clean labels, organic options, eco-friendly packaging. They're actively looking for it.
And CPG companies, they're responding, pouring money into innovation, ethical sourcing, and this ESG-driven branding.
ESG, environmental, social, governance.
Right. It's all about aligning with what they call purpose-led consumption.
What's fascinating, I think, is how these values are almost redefining quality. It's not just price or how well something works anymore.
Exactly. It's about trust, transparency, values alignment. But, this also raises a tricky question.
It is.
With so many brands talking sustainability, how do you, as a consumer, tell the difference? between genuine change and, let's be honest, maybe just greenwashing.
Good point. Are they really embedding these values or just using the language?
It puts huge pressure on them to be transparent.
Absolutely. Okay, so growth is happening, driven by these big forces. But the path isn't exactly smooth sailing, is it? There are obstacles.
Definitely not. Significant challenge.
First one, the source highlights, just fierce competition and price sensitivity.
Oh, yeah. It's incredibly crowded. You've got the giant multinationals battling tiny local brands, everyone fighting for attention.
And then there were store brands, private labels, always putting pressure on prices, right?
Always. And constant discounting. It really eats into the margins for the established players.
So what's the response? They have to focus on what? Value,
Yeah.
innovation, loyalty.
All of the above. Anything but getting dragged into a race to the bottom on price alone, which, again, raises that question.
How do they stand out?
Exactly. In such a crowded space, without just slashing prices, does it mean we'll see maybe more niche brands getting snapped up by bigger players?
Like innovation by acquisition.
Could be. It feels like that might become even more common.
Okay, another major hurdle. Supply chains. Volatility, rising costs.
A huge headache. Unpredictable raw material prices, transport bottlenecks, even geopolitical stuff causing disruptions.
We've all felt that, haven't we?
It messes with timelines and, crucially, it hits profitability hard.
And then the companies have that tough call.
Yeah.
Absorb the costs or...
Pass them on to the consumer, which, in price-sensitive markets, can really backfire.
Yeah, I think most of us have noticed prices jumping around at the grocery store or, your favorite thing is suddenly out of stock.
And it's easy to think of these as abstract issues, but imagine you're a small artisan CPG brand. Your unique ingredient comes from one place.
And suddenly there's a disruption.
Right. A single event halfway across the world, and suddenly your whole product line could be on hold. It just shows how interconnected everything is, even the simple stuff in our pantries.
Wow. Okay, and finally, regulations.
Yeah.
Maze of rules.
Oh, yes, especially if you operate internationally. Different regions, different rules. Labeling, ingredients, packaging materials, health claims.
It sounds like a minefield.
It can be. Staying compliant while staying competitive, that takes real strategic agility. Constant investment in quality control, legal teams.
And if you carry that to global expansion...
It just multiplies the complexity. An ingredient totally fine in one country might be banned next door.
So you're reformulating constantly.
Or using different packaging, different claims. What's okay in Germany might need a totally different label in Japan. It's a constant tightrope walk for international brands. Every new market is a regulatory puzzle.
Okay, so challenges aplenty. But despite all that, there are some really exciting trends shaping the future, right? Things that are genuinely redefining the space.
Absolutely. Lots of innovation happening.
One huge shift seems to be personalization. And these direct-to-consumer or DTC models.
Yes. Moving towards that one-on-one relationship with the customer.
Like personalized skincare, custom shampoos, or even food subscriptions tailored exactly to your diet.
Precisely. And the tech behind it, AI, data analytics, that's what makes these tailored experiences possible. It boosts engagement and, ideally, long-term loyalty.
So what does this really mean for, how you'll interact with your favorite brands down the line?
Well, it suggests a much more direct, customized relationship. What you buy becomes increasingly unique to you.
That's fascinating.
It really is. Imagine, your smart fridge using IoT, Internet of Things, noticing you're low on oat milk.
Okay.
It analyzes your habits, maybe sends you a personalized offer to reorder straight from the brand site. That kind of seamless, hyper-personalized future is what this tech hints at.
Right. That's where it gets really interesting. Okay, next trend. Sustainability. We touched on it as a value, but it's reshaping products too, packaging especially.
Definitely. Environmental awareness is driving huge changes in product development. This move towards sustainable, circular packaging, it's got real momentum.
So we're talking recyclable, biodegradable, maybe refillable containers.
All of that. And crucially, it's moving beyond just pledges. Companies are actually embedding these values in how they operate, how they talk about themselves, because consumers are demanding it.
And that's the key difference, isn't it? Not just talk, but action.
Exactly. Active implementation. Consumer demand is the engine here, pushing companies to really walk the talk. It's not just nice marketing anymore, it's core to purchasing decisions.
Okay, and lastly, technology again. AI, IoT, predictive analytics. How are they changing things on the operations side?
They're revolutionizing efficiency, decision-making. Think smart shelves in stores tracking stock in real time,
Wow.
or automated inventory systems, warehouse to aisle, getting real-time insights into what consumers want, even predicting demand.
So companies can be much more responsive, less waste, maybe.
Exactly, more adaptive. Aligning supply with shifting demand almost instantly. It brings this almost futuristic level of efficiency to the whole chain.
So as we wrap up this deep dive, it's really clear the CPG market is, well, it's complex, but incredibly dynamic, a constant dance between the big guys and the nimble newcomers, all fighting for our attention.
Absolutely. And as our source, Cognitive Market Research, puts it, this whole landscape is being shaped by these huge forces,
Right.
economic shifts, digital transformation, those evolving consumer values, and just relentless tech innovation.
So the future belongs to.
The agile, the data-driven, the ones who are genuinely purpose-led. For businesses like that, the opportunities are frankly vast and still growing. It's about understanding and, crucially, proactively responding to that ever-changing consumer.
And for you listening in, what does all this mean for your next trip to the supermarket? Think about it. How might your choices, or even just the products available to you, be influenced by these powerful underlying forces we've just been unpacking? Next time you pick something up, maybe pause for a second. Consider the journey it took, the values it might represent, the tech that perhaps predicted you'd want it. Keep an eye out for those innovations, those challenges hidden in plain sight. The future of how we all consume is unfolding right now, right there on the shelves.